Afternoon, good morning, welcome to HYCM's workshop with myself, Giles Cochran. Do hope everybody is doing well. Looking forward to taking us through this session. Very special welcome. Good to see you, Johan. Yasser, good to have you back. Matches, very warm welcome to you. Ignatius. Right, now in this workshop, I'm going to get going. I've got a BBC World interview after this webinar, so I want to get started straight away. Don't forget, as we talk about different entries and exits, the whole idea of this workshop is it's an educational one, and I've got a great webinar for us today that's going to be really, really helpful. We're going to be looking at trading the US retail sales. The print has just come, so don't worry, I've seen the print and it's not an obviously tradable opportunity, but I'm going to go through some trades that I've taken this morning, and they're going to be great learning examples, as well as some medium-term biases to look at. So there will be plenty here for us, don't worry. The thing I'm looking at is when you're trading, you're looking to trade a strong currency against a weak currency. Just like you see a strong arm here, you expect it to overpower a weak arm. And in the same way that we'd expect the big arm to overpower the weak arm here in this diagram, we're looking to back a strong currency against a weak currency. So that's how we want to trade in that way. Now, if we just look at the US retail sales, we're going to go through this and what we were looking for. Now, the US retail sales print has come in pretty strong, 10.3% year on year, 0.4%, nearly above the high expected for US retail sales, but the previous was revised down from 1%, and the month-to-month for July was revised down from 1%, and it was a miss at 0%, just below the 0.1% forecast. And the retail sales, excluding gas autos, was 0.7%, so above the forecast. So it's been a mixed data point. Ideally, what you want for these kinds of data points is you want them all to be moving in the right direction. Now, what we've been seeing at the moment, we just take a look at markets. Now, what we've been seeing is a mixed response in bonds. Bonds have been surging higher. Now, this is very important for the yen. And the reason they've been moving higher is most likely the inflation pressure that we saw really building in the UK with the UK CPI print. Now, bond yields pushing up mean that bond traders are expecting central banks to be more aggressive in hiking interest rates. And this little flip higher, we were looking for the retail sales to give us an idea of how US growth was going. If that was a big miss, we'd expect bond yields to push lower, and we'd look for trading something like the pound yen short. Now, if you look at the pound yen, this is suitable for selling at market as a medium-term bias. Now, we have the FOMC minutes coming up later, and so the danger of shorting the pound yen here is that if the FOMC minutes, which are due to be released at 7 o'clock today, if the Fed give an indication from their last meeting that, oh, okay, if they said, you know, as long as data doesn't show that it's crashing lower, or say retail sales holds up, if they said that, for instance, then we'll be quite confident in doing another outsized interest rate hike. That's the sort of thing that will push yields higher, and that can weaken the yen. Now, if you look at the start of the week, we saw that really big miss in New York Empire State Manufacturing. To see how it comes in, minus 31.3, well below the minimum expected of 3. Now, that is extremely disappointing print. Now, that would have traders worried that US growth is slowing. That is what sent and helped keep US 10-year yields down lower on the Monday. You see on the Monday, if we just take a look at 10-year yields, we see that 10-year yields drifted lower on the Monday. Okay, and it was for that reason. We now pushed back up into that 2.9% region, but on the Monday it was pushing lower. So that allowed the yen to strengthen. We're now seeing a little bit of that unwind, but what investors are trying to understand is, where is the Fed? What are they going to do? Is growth slowing in the US? So we saw, we're seeing some mixed data points. Remember, we had that very strong jobs data point, 2 Fridays ago? Remember that Friday? We saw a really strong jobs print for the US, well above market's expectations, 528,000 versus 325,000 expected. And then the following week, we saw inflation showing signs of dropping lower. And you can see core inflation down 5.9%, not 5.9% below the minimum expectations. So what markets are doing is they're sort of flip-flopping, trying to work out, well, is US growth slowing? Will the Fed slow down their interest rate hikes? And all that is pushing and pulling yields around. So what we're looking at for the FOMC minutes later is any clear indication of what the Fed's policy is going to be. Now, the best opportunity will come if the Fed sort of stress, we're concerned about slowing growth. We see growth slowing. We're looking at hiking at a slower pace. Anything like that, then what we'd expect to see is 10-year yields fall, and that would be a great opportunity to potentially short the pound yen. Now, this morning with my community, I was outlining to them why it was a good idea to go long euro pound on the inflation print that we had. Now, I am currently long euro pound from the inflationary print that we had earlier, and I'll just run through that with you because it's a good learning point. In the inflation print, just check you're seeing, yeah, in the inflation print, what we were looking for here was we were looking for inflation to come in above market expectations. And you see how it came in 10.1% for the headline and 6.2% for the core. Now that was nearly above the high for the core, and that was above the high for the headline. So in other words, inflation's high. Now, if you go along to my blog, you will see a section that looks at central banks and what central banks have done. And if you look at this section under central banks, you'll see Bank of England here, and you'll see that the Bank of England brings forward UK recession projections. So what the BO did, yes, they hiked by 50 basis points, but they see a recession coming in, and we were looking for potential dip buyers from this key trend line in the euro pound. So we're expecting dip buyers in the euro pound. Now, that weakness has been exacerbated because of high inflation. Now, you may say, well, hang on, doesn't high inflation mean central bank has to hike interest rates? The difference in the UK is this means stagflation, high inflation but low growth. So this is a negative for the pound. So what I was expecting is to see the pound weaken out of that data point, although it was counterintuitive. So you can see the initial reaction was lower. I bought into that dip, and now the way I'm playing this is I'm long the euro pound, and you look at this technically, I'm just going to trail my stop up. You've got Harami inside bar, false break of Harami inside bar. There was another opportunity earlier in the session to go long again. I'm long euro pound, and I'll just bring my stop up below the low of each candle. So we're up at pivot point. You could take profit there, but I'm looking for a move back up to that 0.04450 region. If you're not long, it is still suitable for going long in euro pound from any retracements back down to that 0.8400 region. So that is still suitable for shorting for going long euro pound at present. So any dip downs can be considered suitable for buying, and stops just underneath that 0.8380 region, which is the other side of that target, looking for a move up to the 84450 region. That's what we're looking at. Now, another trade that I took and I closed out was on the Aussie New Zealand dollar pair, and I hope this is helpful. Now, just before the RBNZ interest rate decision, the Australian wage price index data was released. And if you see the wage price index data, what you can see is that the data was a miss. Now, RBA are confident that very, very strong wages should be supportive for the RBA's tightening monetary policy. So this miss here is a negative for the Australian dollar. Now, it's only it's one piece of the jigsaw puzzle, so it's not a huge sentiment, but it is a little bit of negativity for the Australian dollar. The RBNZ met and they took a more hawkish tilt. They brought forward They raised the terminal rate to 4.1% for December 2023 from 3.95%. And they raised their rate for this year to 3.69% from, I think, 3.29%, something like that. And Governor also said he didn't expect the New Zealand economy to fall into recession. Instead, what he expected was for the New Zealand economy to slow down only. So that was on net positive. So remember, from the diagram, what we're looking to trade strong currency against weak currency. What do we have there? Now, it's just intraday, so it's only worth like, 1 or 2 sessions, but we have weakness in the Australian dollar, strength in the New Zealand dollar. So that meant when I came to my charts this morning, I did 2 things. I set a sell at market, which you can see as we're pulling up towards that pivot point. I sold at market just around 6:30 a.m. Then I entered another sell limit just above that pivot point there on the daily chart. Stops running above the R1 point at 1.092. And I was looking for a move back down to this S1 pivot point. I've now taken profit on 2 positions now. It's only intraday. So it's only 24, 25 points plus the other move. So it's about, sort of 35 points-ish in total. But that's a move back down to that S1 pivot point. That's all I'm expecting. Now, let's say for the sake of argument that I got to the end of the session, 5 p.m. UK time, and price was still sort of hovering around here. I just close it. This is short-term sentiment trading. I'm not expecting it to last for a long time. The Aussie-New Zealand dollar pair quite well shielded against risk-off trading, because if you see risk-off trading, they both tend to move together. So it's not a bad little pair. Intraday short that I've taken on the Aussie-New Zealand dollar. Intraday long I've taken on the euro pound, but I'm now allowing this to develop into a swing trade. Okay, so I might hold this for maybe 1-2 days, ultimately looking for a move up to that 0.8440 region. Medium term, I've got a sell bias in the pound yen, stops just running above 164. Okay, so I hope that helps to see how you can go about trading. I've also got a medium-term sell bias in the euro pound, which I'm keeping a careful eye on, with stops just running above that 137, 138 region. Now, the thing I like about the euro yen is the euro has reasons for weakness. The German's new economic data out yesterday was a big miss, and it just increased it was mixed data, but it increased expectations for euro recession rather. We've got the Rhine River level became impassable. That's why I shorted the euro yen out of last Friday and took profit on a position at that 135.50 region. I'm now re-entering shorts as prices move back up to this level, stops above 138, looking for a move lower. Now, the risk here with this is the yen is weakening, and the reason the yen is weakening is because yields are pushing higher, okay? So you see that US 10-year yields? If US 10-year yields keep pushing higher, then the yen can weaken further, and that can negate my outlook. Now, my outlook is still a medium-term euro-yen short, but that would take my stop out. So if price moved higher up into that level, I'd reconsider shorting again. But that's where I just take my loss. And if the 10-year yields do push above this level here, and they close above that 2.9% region, I'll just close out my euro-yen shorts. The major risk to all this, of course, is the FOMC minutes that are coming up later in the session. So I hope that helps. You see how someone with professional trading background goes about trading. I thought it'd be helpful today just to show you some of those trades I've taken intraday, how I've managed them, a few different trades. I've got a swing trade, intraday trade that's literally just intraday, and a intraday trade that I'm trying to hold for a couple of days. All right, Aaron, I'm just going to try and get to your question. Yeah, is there any probability that China could grow now? The issue with China, and it's a little bit tricky, is as follows. If you take a look at equity markets, what you see is China's trying to form a bottom here. Premier Li said to 6 top provincial officials that they need to take it seriously, the recovery, economic recovery for China. We had People's Bank of China, they cut interest rates by 10 basis points at the start of this week. That's positive. And the property sector, which is struggling, the government has talked about a government bond. Medium term, I do think China 50 can move higher, okay? And you can see here price is trying to put in a little bit of a recovery. The outlook for China's 50 index is different to the West. It's had a 40% plus fall, and now China's looking at stimulating the economy, unlike other central banks, which are looking at cutting interest rates and dragging the economy. So China's 50, yes, GDP is still meant to be positive, Aaron, but the problem is it's less positive than it was been expected. So, you know, expectations are dropping in terms of what China can do. But the worse it gets, the more support that China's likely to promise. So China's still expected to have positive GDP, somewhere around 4%. I think ING revised their forecast down. So I would expect positive China GDP growth still. But one key risk to that outlook is their China zero COVID policy. So, you know, they lock down whole cities when they get some cases. And if they keep doing that, then that's going to weigh on China's GDP. Yeah, okay, I hope that helps, Aaron. Okay, folks, if there's any other questions, please do let me know. But keep your eye on 10-year yields for the yen. Remember this very key relationship that when 10-year yields fall, that strengthens the yen. When 10-year yields rise, that weakens the yen. So the rise in 10-year yields is just what's weakening the yen. That's helping euro yen, pound yen a bit higher. But the question is, does it maintain that stance? And then the next clue will be from the FOMC minutes. Okay, folks, I hope that helps. All right then. Don't forget, back on Monday, and we'll be getting ready for the event. The good thing about this week is, and these times, economic data is going to start biting again, right? So economic data is going to start having an impact in FX markets again. So really, it's quite an exciting time. So come back on Monday, and you can see here, you know, this is a really, you know, decent move that we got in the euro pound today. Little flush low in the Aussie New Zealand dollar, to take advantage of that. So make sure you come back on Monday, folks, and I'll get us up to speed with the key things to be looking at. Thanks, everyone. Now, take care. Have a very good rest of your day. Thanks, everyone. Goodbye. Yeah, cheers, Aaron. Cheers, Johan, Ignatius, Salvatore. Thanks, guys. Goodbye.